All right. Good morning and welcome back to the first session for the day. It is beginning of a new week. Uh, Monday morning, Europe Open, 2:30 a.m. Eastern. A bit unfortunate actually. In gold, uh, as far as the direction is concerned, it is still very much possible for a good counter trend rally to materialize. But at least in the short term, we will have to wait for a corrective drop in the metal to go long again. uh, have to clearly view the larger picture first, and then we'll go back on the 4 hours. Now, this is what has already happened. We had a five-wave rally since the 2020 March 2020 lows. Well, that could be the beginning of a new trend. Could be bracket one or into bracket A in case of a corrective ABC 535. All right, now on the right hand side, coming on the right hand side, it is very much possible for uh, A/1, B/2, and C/3. Now this is the larger wave count or wave structure that we should be expecting to unfold. All right. Of course, we are going counter trend for now. One more time. This is the wave structure on the larger time frame, the daily one. All right. So, what can be expected? What can be expected out of the price action that we have been witnessing lately since the last week? There's only one bad move, one bad day, I would say, as far as the price action is concerned. But it doesn't really bother personally to me as far as the uh, structure is concerned. It remains unchanged absolutely. This is what is expected for wave C to unfold now. A very high probable trade setup from here is a rally, and then wave 3, possible wave 4, and then wave 5. Now, this is expected to be wave C would either expect, we can expect wave C to unfold as an
Hello.
impulse. Yeah, either as an impulse or a diagonal. Okay. So at this point in time, we don't know whether it's going to be an impulse or a diagonal, but it looks like it's already done a five wave, which says it possibly could be unfolding as an impulse 53535. Okay. Having said that, what looks like more probable right now? If if we now go back, so the larger picture, the bigger picture says at least a corrective drop, at least a drop towards 1.13 is absolutely possible in the euro USD at this point in time. Is it going to happen from here? Don't think so. It requires a pullback, all right, and then continue lower again. So let's now go back on the 4 hour chart and let's focus on this price action from 2266 onwards. Okay, this is, I'll remove the waves here, or let it be so. that boundary has to be retraced. Now, if you notice the low, which is being printed in euro, is not as significant, just a few pips below 1.1750. It could be unfolding as an expanded flat or five waves complete. Let's label on the left hand side first. And stick to our wave counts, no change there. No real adjustment required in the euro actually, euro and dollar index. Which brings us to a wave one of C. Whether or not this wave one is print here or there, it doesn't really make much difference with respect to the price action or the wave structure, both. Right? It could be wave one here or it could be wave one there. But the most important thing that we need to understand, we definitely are not changing any direction at this point in time. The important thing that we are still waiting for a corrective rally to complete, and that is not looking like a complete correction. It has not even tested the 38.2% of the previous wave for of a lesser degree. Now, a minimum requirement or minimum push could take us towards 1.195075 zone. If this is an expanded flat ABC, it is either towards 1.195075 or a bit higher towards 1.2070. This is what is the most probable output in the next few days or weeks to come. So we're not changing any direction in actually any three of all three of the instruments. The only thing is we have not initiated gold positions. It's rallied too fast. We are again long 755. Recommended stop is at 1700. And the target we propose right now is two targets, 1.1950 and 1.205070. All right. So looking at the larger picture, at least a corrective wave C could be passing us through 1.13 going forward. But 1.13 doesn't look to be in the making right from here. It needs a possible pullback. The RSI, there's no great divergence, but if you compare from the previous wave 3 termination, yes, there is a divergence scenario coming into play. All right, so keep a watch on the long side for now. At least we will like to take the counter trend, which is at least 300-400 points from now. Okay, now the big guy. This was a bit disappointing on Friday. Unless you had your shorts lower down there, we might have taken some profits off the desk. But if you didn't carry shorts earlier, then it was a bit of disappointment, in the sense that we still would like to believe what with a slight adjustment actually. Wave 4 might have terminated here and expanded flat and 5. But this is the only adjustment we are making. could be a capital A. Remember, we are doing a capital A first over there, and then small a, b, c was expected. That was proved to be completely wrong. We have adjusted the fifth wave now. Capital A comes back lower. If this is correct, then what we still have an ABC in the making, and prices could still rally towards 1825. But is it the right price to go and buy? I don't think so, because you see, it's already rallied from 78 to 48 almost, 70 points after the low was print. So what we need to do is just wait for a corrective pullback. Or the pullback can come now, or it can come after 1770 touch. But it's better to wait for a pullback to go on the long side now. Or or the other way around, we can sell on rallies. Okay. But this is the zone that we'll be watching for gold to enter on the long side. 1705, 1710. All right, this is what we're looking for. Corrective decline and then a rally. So at the moment, we don't have any trade in gold, but we'll just keep a watch on those levels. Around 1705.10. The proposed stop loss would go towards just below that 1677, would be 1675. This is what is the proposed trade plan. We're looking to buy lower now. Let's see if this is going to come today or tomorrow. The rally was so steep, it didn't give any chance to, before we even realized that that was not the case in the euro, and absolutely no case at all in the dollar index. In fact, I thought if euro was triggered out, the dollar index might have also triggered out, but that was not to be the case. Here, so if you look at the larger picture in the dollar index, we had a 5-wave decline, impulse since the 2020 highs. Okay, which is probably being corrected, and the correction might exceed towards 90, 95, 97. All right. The big question, as we posed in the euro, is it going to go directly from here? It doesn't look like, because there is already a 5-wave move, which requires a corrective drop within the sub-waves, all right? Now, if you look at the right-hand side, maybe wave A or W might be already in place. That brings us to a logical conclusion that wave B or X is also in place. And Wave C is in progress. Now within wave C, if we look at the structure on the 4-hour chart, ideally wave C would unfold into 5 waves. Probably wave 1 is in place. Now this is the wave count proposed. Good amount of divergence being seen within the price action of the dollar index and the euro USD. So confidence level stays as it is, except for a bit of noise on Friday. To remain on the short side in the dollar index. In fact, we added shorts at 75 as well today. We are expecting what? An ABC. ABC corrective decline, which could be termed as the second wave. So it's either going to be wave 53535, or probably it's going to be 53535 because the first wave is an impulse. So rather than an ending diagonal, which is also possible, we'll be looking forward for an impulse for wave C to terminate around 95, 97. At this point in time, we are focusing on the counter trend corrective drop back towards 90, possibly by the end of August, and thereafter we pick up on the long side again. If you want to see the upside targets of the entire rally, and here it is, and there you are. It could go towards mid 95 or extend towards 98, which is the 61.8% of the entire drop from 2020 highs. All right. So one Gartley structure still left. And this is what exactly could be happening on the reverse side for gold. But we would like for a corrective decline for gold before entering longs again. Yeah, we'd like to remain bullish at least for a few more days in all in euro and gold, and bearish for a few weeks in the dollar index for now. All right, so the trade plan, okay, this is continued. We have sold at these prices 92.30, 92.50, and 92.75. Stop loss 93.30 and target 90.90. All right. So we keep the session a bit short until now. We'll focus on these 3 trades, and for now, the focus will be on a corrective decline, waiting for a corrective decline in gold and initiate longs over there. We're watching around 1710 possibly, and we'll confirm the same into the room. All right, let's bring this current session to a pause now. We'll be back again about after 4.5 hours to pick up the story in the New York Open. Until that time, as always, thank you for tuning live, or if you're watching a recorded version. And as always, until the next one, please do take care and God bless. Goodbye.